Yo, what is up, everybody? How we doing? You like my music? We got some new background tunes. TBD on whether I'm gonna play these tunes during the show or not. But I'm liking it right now when it's just me. I'm over here vibing. We're over here vibing. What's up, everyone? How we doing? Welcome to All Access. If you have never seen this show before, it's a relatively new show we're doing at Benzinga, and the idea behind it was we spend all day, every day, talking about stocks, looking at charts. Is it going to go up? Is it going to go down? Is it going to go sideways or backwards? Don't know. What we don't do enough of, though, is take a step back, pause, take a step back, and actually get to the story of these companies. We so often we reduce these companies to a number, to a ratio, to a price, to a ticker. But there's so much more to it than that, right? There's people, there's stories behind these companies. That's the point of this show. We want to get to the stories. So what we have today is four companies, or four executives, I should say, from companies that are going to come on and tell us about their story. And why? Because stories are incredibly interesting, right? And that's probably the most obvious thing. But also, that can be a launching off point for you. Maybe you hear something today that gets the gears turning in your head about a specific industry or a specific sector or a specific kind of a business or whatever. And so the idea of this show is, taking some time, spending 20 minutes with these executives each, and talking about their stories and not getting so bogged down in the numbers and the charts and all that stuff. So we will do some stock talk as well. Not to worry. Our first guest today is not coming on until 9:40. So don't worry. We will do some stock talk between now and then. But I just want to get through some housekeeping items, and then we'll get to the stock. So first things first. And I do want some feedback on my music, by the way. Tell me what you think. It's a brand new feature we're testing out. First things first. The All Access show is a paid show. It is one of the ways Benzinga monetizes our YouTube channel. Right? The show is demonetized in the eyes of YouTube. There will not be ads on this show because the companies that appear on this show have paid Benzinga to be here. Saying that up front, we are transparent about that. What they have not paid for is specific questions. They do not know what I'm going to ask them, and better yet, they don't know what you are going to ask them. If you have a question for one of today's guests, please drop it in the chat. Let us know what you want to talk about. I will ask your question for you. Okay. So they've paid to be here. They don't know what I'm going to ask. It's a free flowing conversation. So that being said, the background has got to stop. See, that's good feedback. That's good feedback, Duke the Fool. I appreciate that. Your audio is breaking up and crackly. All right. See, I don't know these things. This is why I have a producer with me who's doing things in the background. We're getting a lot of hate on the music. That's cool. I don't take offense to the music and the hate there. Again, like you said, it's a new feature. We're trying it out. So apparently it's not working. That's okay. That's fine. So, okay. Let's get to the schedule of today's show. We have, like I said, four companies that we're going to be talking to. First up, we're going to be talking to a company called Amesite. Ticker is AMST. We're going to talk to the founder and CEO, Maraoui Sastry. She has a very interesting background. She was an engineer, and she had to do some online education as part of that engineering, as part of her job. And she fell in love with the idea of online education 3 years before COVID happened. Okay, the timing really couldn't have been better. So she's gonna join us in around 15 or so minutes, and we're gonna talk about her story there and her background and how she just changed her whole entire career on a dime to start an online education company. We're gonna talk to Journey Medical. After that, ticker is DERM. We're going to talk to their CEO, Claude Maraoui. They're working on a number of, as you can tell by the ticker, DERM. They're working on a number of dermatological drugs. We're talking to Oncocyte at 1020. Their CEO Ron Andrews actually came out of retirement. This guy was retired, golfing, living his best life, came out of retirement to run this company. And then we're going to wrap up the show today with our last conversation at 1040 with Missresh, a Chinese retail play. And we're going to talk to their co-CFO, Catherine Chen. So, and with regards to Surge, they were the first up. They were the first interview we had scheduled today. They had to reschedule. It was a very last-minute thing. The CEO was feeling a little under the weather, as I understand it. We're going to get Surge back. Don't worry. I promise we will get Surge back. It won't be today. It won't be next week either. But I have offered them a slot 2 weeks from now, unconfirmed. This all happened late last night. I apologize for that. We will get Surge on. I promise you, Lou. Don't worry. Nothing nefarious is going on. We're just simply going to reschedule for a couple of weeks. Jimmy is saying, what happened to Mitch and the boys? Why is my mouse not working? Mitch should be here. Mitch is supposed to hop in with me for a couple minutes and hang out. We got 2 minutes till they open, so I got a lot to do. Okay, real fast. The All Access show that we do is sponsored by a company called Ticker. I'm going to bring the link up on the screen right now. It's Ticker with 2 I's. Tiicker. There is a link in the chat. Okay, it's ticker.com/Benzinga. I'll put it up on the screen as well. There it is. Okay, Ticker is a company that is connecting everyday investors to the companies that they love. They basically just offer consumer perks. If you own stock in a company, you're eligible for perks. It really is that simple. You just get rewards for owning a stock. So check that link right there, tiicker.com/Benzinga will take you to this screen. Here's what you got to do. You sign up, right? You create an account. After you click create an account, you have to then confirm your email address. Once you confirm your email address, that will redirect you to another page where there is a box. The box says Benzinga All Access Listener. That's you. Check that box, and Ticker will send you a $20 Amazon gift card in 30 days. So again, tiicker.com/Benzinga. Create an account, connect your brokerage, confirm your email address, check the box, and they will send you a $20 Amazon gift card. That's it. I mean, who doesn't like free stuff? I like free stuff personally. So check it out there. Again, the link is in the description. I'll talk about that again throughout the show here. And then last thing I want to do, I know we just opened up, but I just want to play a quick Ticker video if I can, and then I'm going to bring Mitch on, I promise.
What is Ticker? That's right, Ticker with 2 I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
All right, it is 9:30. The bell just rang. Let's bring on Mitch. Mitch, I'm going to bring you on. Good morning. I'm going to bring on Benzinga.
What's up, guys?
We've got Benzinga Pro up on the screen. I don't have a scanner tool. Oh, there I do. No, yes, I do. Okay, so let's just go look at the market. What's happening right now?
All right, guys. Right now, looking at oil, looking for a short on Chevron. Trying to get this bounce back to the VWAP. VWAP right now is sitting at 127.58. So let's see if we can get it bounce above 127. There's 54s on the offer. There's 67, 70s. Let's go ahead and see if we can get in here. All right, right there. Got it. 57s. Short at the 57s there. Risk will be on 128s, guys. So let's see what happens on CVX. Getting a short on here. But what do you see in the market?
I don't know. Let's just go to the SPY. Oh, I can't type SPY. We're going to hang out for a few minutes, and then we're going to have our first guest on. But okay, 15-minute chart in the SPY. What is happening? So a slight bounce off the open. Nothing to write home about, though. Seeing a little bit of buying here. Let's go to let's keep the 15 minutes up. Okay, slight bounce in the SPY off the open. Same story in the Qs. We kind of saw this yesterday. I would preach caution. Yesterday was scarring, I think. So if you see the QQQs at 364, 365, 368 in the next couple hours, I would say hold the phone. Don't be chasing that. I could see maybe taking a flyer long up here, but I would definitely not be chasing anything up 1% today at all. That's where my head is at here. So Mitch, did you just free? Oh no, you're good. I thought you were
No, I'm not. I'm here just trading the CBX. It's looking good for me already. We're up about 70 cents. Oh no, almost a whole dollar here. Let's go ahead. Let's keep watching to see if oil keeps coming on down. Another one that you could take a look at is drip coming right off the gates, getting up there above the 450s. So if you're looking for the oil play on just the daily, this is of course a bear 2x. So it's going to be moving faster than some of these oil plays to the upside because it's the bearish one. Of course, you could also look at the bullish one, which is Gush, to kind of keep it in mind. And you should see that one coming down. So the opposite of that one is Gush. Right now, I'm taking a look at sectors. If we want to take a look at what is green from the open, technology is actually green from the open.
We just saw the Qs. So Qs are up here. You know what? Let's pull up. I'm not in my usual pro, so I apologize. Let's pull up just a watch list here. So we got some green. Yeah, I mean we got some green. But again, we saw this yesterday. There was buying off the open. Okay. It seems like it might be the same thing this morning, right?
Hendrix is waking up. I don't know if that's a bullish move or a bearish move, but Hendrix is waking up, guys. So let's see what happens in the market today. One of the things that we've been seeing, right, is a lot of bounces, kind of these opening moves where it has momentum to the upside. But after, let's say yesterday, after 11, these moves all got sold. So I think today you're also getting a little bit of that. If you take a look at Apple's up towards 165s, kind of doing a similar move that it did yesterday, where it started going on up. But we're going to see if it really holds these moves after, let's say, 2 hours into the market. So after 11, if you can see them hold, that's where I'll start getting a little bit more bullish on the day. I don't want to be reacting too much on the early side momentum.
Oh boy, and whoever Roy just suggested I bring up a longer term chart of the Qs. I mean, yes, it is obvious the trend that we are going. Although I'm still in the chop camp. I'm still in the sideways camp. I'm not thinking right now. I'm not ready to call Qs going to 300 or Qs going to 320. It wouldn't shock me for a second if we just kind of stay in a range. Maybe the range is like 340 to 4 or 340 to 380. I don't know where the bottom of that range is. Maybe it's those lows from October. I don't really know that, but I'm not in the camp that we're just going to be free falling here. I'm really not. We're seeing.
I'm in that camp though. I will tell you that, Spencer. I'm in the camp that I just don't see us coming back until at least March.
Well, and let's just
into the first interest rate hike.
Well, okay. I'm so glad you mentioned that, Mitch, because next week we do have our first FOMC meeting of the year, our first Fed meeting.
This is going to be big.
It's going to be Tuesday, Wednesday, like they always do. So Wednesday at 2:00, they're going to release a statement. They're going to have a press conference at 2:30. We know a few things, right? We know that the Fed has said they're not going to raise rates at all until they are finished with their taper. Okay, so is the taper done? We'll find out on Wednesday. And that being said, do they give a clear timeline for the first interest rate hike? Do they give guidance on, is it going to be 2, 3? What does the dot plot say, right? 2, 3, 4 hikes this year? I'm thinking we probably don't get to 4. I'm thinking we probably get 2 or 3. And then do they give guidance on unwinding the balance sheet, on the balance sheet runoff? These are all questions the market has. Wednesday's going to be a really big day, so let's stay tuned for that. I don't know, but
all right, the CVX trade working here. Let's see if it takes out the lows. 126.60 is where we want to see this continue to break down here. It's looking really good here. We got it in at 127.57, so almost up a point here on CVX. There you guys have it. Boom, breaking the 60s there, going into the 50s. One thing you want to watch is to see if you can get some big share size to come in there. As you break important levels, you want to see some big bids start knocking this down here. There, right there, it went through 2,500 at 126.50s. Boom, you see the reaction there? Comes down towards the 40s really quickly. Why? Because someone slapped on the bid there. So we'll see what happens here on Chevron. Keeps coming down. I'm going to be looking for a little bit of an extended move here. We're going to be looking for a move down towards 125.50s. That would get us 2 points on the name and would be a hell of a trade.
All right, I'm just going back. After yesterday, I've got like my finger on the switch here. I'm ready to be like, oh, we're selling. We're not there yet, obviously. We're not there yet, but yeah. I'm curious what everyone is watching. Kenneth is pointing to an ATL in coin, COIN. Yeah, whoa, yep. Holy cow. You know what? It's just pain today in crypto lane. Look at Riot. Look at Riot down 4%. Oh, wait a minute.
Well, you know, I talked about these a little bit in the pre-market prep show. That when Mara gave that red flag, they still haven't come back from those levels. So whenever we got that red flag about potential news that could come out, there was some regulatory looking into Mara, and since then, it's just come straight down. So to me, this doesn't show confidence in Bitcoin, in cryptocurrency, at least for me.
Yeah.
There's Apple coming to VWAP. It's going to be so important for it to hold VWAP and take out the highs here. If you look at the Apple chart, that's really what I'm watching for the overall market. Apple's the one that's held us up. If it breaks down and keeps breaking through daily lows, we got to be careful for the SPY.
Can't ever move too far away from the SPY. How is the IWM doing? And then we got to look at Netflix. We got to look at Peloton. So a slight bounce today. Netflix. How we're looking off the open?
Netflix.
More pain. Let's go to a 1-minute chart on Netflix.
Ouch.
More pain. Oh man. Okay. PTON. I bet you we bounced because we were bouncing all morning. Yeah, it's slight. Bounce is a strong word. How high did we get? What was that candle? 26.67. We're a buck off that now and dropping. There are always going to be some buy the dippers. Nothing ever goes straight down. But
Tesla starting to leak there, guys. Is not holding the 1,000 mark. Hit the 1,000 mark above 2 or 3 times, wicking above that. Then the last breakdown candle right there on the 1-minute chart for the 935 move. You can see it touch. Where does it go to? The high of 1,056. Then really quickly it rejects, starts to break down towards the support. 980s here, catching a little bit of support, but then flushing through there. Now Tesla down towards 977.
Yeah. SA, why you gotta do that to me, SA? Even though SA.
The SoFi, man. SoFi. I was concerned about that.
I will say this on SoFi. At least I called it. At least I said 3 days ago that we're going down to 14. We're going back to where we were before the news hit. Or 2 days ago. Whatever. Time. I don't know about time, but
I don't know about time.
Yeah, I don't know about time.
I like that comment. I don't know about time anymore.
It's bad. Okay. And then just real quick, last thing, and then we got to hop because we have our first guest here.
Yeah,
we get emails, we get tweets on BBIG every single day. Mm-hmm. We are doing our best. We have reached out to the company several times. They have not been super responsive. So we will update you when we have an update on BBIG. But that's all I can say for now because we're trying, guys. We're trying. But that being said, Money Mitch, you got to go because I got our first guest here, and I'm
All
excited.
right, before you get on out of here, I do
Yeah.
want to give a shout out to anybody that's never seen live trading with Benzinga. This is the reason why I'm on right now. This is what we do, guys, every morning. Now we're going to go ahead and get to some opportunities that are out there, start learning from some companies. But like always, I'll be in the chat and stay with you guys.
Yeah, keep the discussion going on the stocks in the chat, throughout the show here. But especially now, right when we're the market is sort of in zigzaggy, it's weak, right? Maybe now is the time to take a step back and actually do like a fundamental deep dive on these companies. Part of that is hearing directly from executives. I have the founder and CEO of Amesite here with me right now, Anne-Marie Sastry. I sort of teased it earlier. She basically switched her careers on a dime and got really into the idea of online education by sheer coincidence, like right before COVID happened. So let's bring Anne-Marie on right now. Anne-Marie, give me the thumbs up if you're ready. She's ready. We're going to bring her on. There she is. Anne-Marie, welcome to the show.
Spencer, thank you so much for having me. It's such a pleasure to be here.
So was I right? You were an engineer, and I believe actually in Michigan. Shout out to Michigan. You were an engineer, and then you were doing some online education, and then you're like, oh, this is a really cool thing. I should probably start my own company. Is that basically what happened?
Well, it's the short version.
Okay.
And yeah, I am an engineer, and I was a professor for a long time, actually. So after I finished my doctorate at Cornell, I went off and programmed at the Big Cray at San Diego National Labs, and I was a computational scientist there. Then was recruited to the University of Michigan, where I served on the faculty for 17 years. And I started a large global graduate program, so I taught online. And I thought the experience was terrible. I thought the program was good, but I thought the technology was not good. I also started a company when I was a professor called Sastry 3. It became quite successful. I sold it. And then I went to work at the acquirer for 2.5 years at Dyson. And we sold that company for $90 million, and then decided to leave and start this company and come back to online learning, but with an eye toward improving it, with an eye toward bringing technology to improve the experience, and something I'm very passionate about.
Mitch says it looks like Colorado. Well, where are you right now?
Presently in Utah.
I'll give you're close, Mitch. Half credit for that. Okay, so then what happened? So you had this bad experience, right? Teaching an online course. So you thought, all right, I'm just going to do it myself. I can do it better.
It was good and bad. It was good because the program we built was quite successful. It's called Energy Systems Engineering. We educated people to go execute on clean tech, and those students are all off doing wonderful things. The bad thing was the user experience. It was frustrating to use online tools as they existed. And fast forward 10 years after I started the program, the technology hadn't improved much. So I thought, okay, let's bring what I know how to do as a tech entrepreneur to this very important space, because the nearest term way of getting lots of people in education is to do it online, especially for professionals, of course.
Right.
But the experience has to be good. The user experience has to be good. And there are so many organizations that deliver learning that need this solution. So instead of trying to boil the ocean and start other universities or start other learning companies that just deliver learning on their own brand, our thought was different, which is let's go equip every organization on the planet that wants to deliver e-learning. Let's make it awesome. Let's serve all of those clients and become partners to them. And that's what Amesite does. Amesite is an artificial intelligence software company that delivers learning ecosystems for organizations that deliver learning.
The timing of this, you couldn't have known that the pandemic was going to happen, but the timing really couldn't have been better. So I'm really just curious what the last 2 years have been like, or maybe like if you can tell us like what like the first couple of years were like, and then what changed when COVID hit.
Well, the first couple of years we were telling people the online experience can and should be better. Yeah. The last couple of years, everybody said, yeah, the online experience in education is actually the worst on the internet. And so the first 15 minutes of every conversation changed. The opportunity, though, became really clear with future of work type issues. I mean, with more people working remote, that's not going to go back. I mean, people are not going to go back to a completely inflexible schedule. It doesn't make any sense economically. It doesn't make sense for people's lives. People will choose a hybrid approach, but that means that people will be choosing what activities I do online and what activities I do on ground. And training is something that all professionals have to do lifelong. And training, absolutely, we believe will be nearly 100% online. It's convenient. It can be asynchronous. It's deployable. It's scalable. It's affordable. It's accessible. And with the right software, with the right user experience, it can be very, very effective. Amesite delivers over 98% retention across all of our learning programs, from high school kids to senior executives, because of the AI-driven nature of our technology.
So maybe we should just stop and explain what exactly. So you're offering like a white label solution for providers, is that right?
That's right. We build ecosystems. We
Okay.
build ecosystems for organizations that deliver learning. So recent wins, Ronald Reagan Presidential Foundation and Library, or an institute, Innovation Foundation, which is founded by Kathy Wood, who's the CEO of ARK Invest. These organizations are delivering learning, and they need a platform. And they don't want to deliver on they want to deliver with an ordinary experience, and they don't want to deliver on somebody else's brand. They want to deliver on their own ecosystem, and that's what Amesite builds.
So since you mentioned the Kathy Wood news, that was the thing from yesterday. So wait, what exactly is that news again?
So we have a press release out on it that has all of the publicly available details. Innovation Foundation's plan is to scale out, to build out innovation learning across school districts across the nation, and Amesite's platform is the one they chose. We built them a platform so that they can do that, and it delivers learning experiences.
So yeah, when you say like learning experience, I mean it's like, I think when people think online learning, maybe they think like, oh, like you share your screen and it's like a PowerPoint, but like what else are we really talking about here?
That's a great question, Spencer, because if you look at other kinds of internet experiences, you can chat, you can video, you can share, you can be social. Learning hasn't been that way. Learning has been very siloed. You just sort of consume a PowerPoint and click buttons, and that's it. Amesite's platform is very different. All the technology is in one place. So you can stream video lectures, you can chat, you can message. The platform automatically notifies you before things are due. You can integrate with your calendar. All of your assignments, all of your deliverables show up on your own calendar. Amesite also delivers just-in-time learning. We use artificial intelligence to find articles that are related to what's being taught in the course and deliver those while the course is being taught. So instead of just being siloed and just looking at, maybe old material, you also get a refresh of articles that are related to what you're learning. And that's vital. That's really important because that contextualizes learning. The reality is, going forward, education is not going to be about reading aloud from page 42, 8-year-old material. Education is going to be a shared experience. It's going to be a community experience, and it's going to be informed by current events constantly. Every time someone consumes a learning experience on the Amesite platform, they receive new content. And that's really important. We think that's vital to the future of learning.
So as far as your customers, obviously, like, universities come to mind, schools come to mind, but who else are we potentially talking about here? Like that's in your customer base? Is it, in theory, is it any company that requires education for its employees? I mean,
Absolutely. And every company that wants to exist is going to need to train its employees because it's an enormous competitive advantage. So our 4 segments are enterprise, university, government, and nonprofits.
Government. Oh, that's a good one too.
We recently scored our first government win last summer with Michigan Works, which is one of a network of 16 workforce development agencies in Michigan, and they are training their own employees on the platform. We think, of course, there's going to be huge interest by government to upskill labor forces. It's understood by all governors, essentially, that the talent is the thing. Talent is the competitive advantage. And so workforce development programs are something that we think are very important for us going forward.
There's a good question here from the chat. I will ask questions from the chat, and Miss Whitehorse has one. I guess Miss Whitehorse has an 8-year-old, so she's asking about her own experience here in terms of just elementary school kids. I mean, like what kind of technology does Amesite offer there that makes that easier, so it's more engaging than just a Zoom call?
Thank you for the question, Ms. Whitehorse. Amesite truly believes that kids need to be together. We focus more on adult learning, high school to adult learning. What we do there is teacher training, and that's the way we think we can make a big impact, because teachers need to be kept up to date and keep their skills up to date. And teachers learning online makes a lot of sense, and then they can bring those those innovations to their learners. A case in point is the Henry Ford Museum. We do all of their learning programs. We built them a platform called InHub, and they deliver teacher training, and they deliver training on inventiveness and innovation. And so they train teachers on how to bring that into the classroom. They also run a very respected global program called Invention Convention, where kids come and present their work. And the Henry Ford Museum of American Innovation is very focused on making sure that teachers are ready to prepare students for that.
Shout out to Henry Ford. It's a fantastic museum.
They're amazing, aren't they?
Yeah, they're. If you've never been to Southeast Michigan, go for the Henry Ford Museum. Another question here from NCAL. What is your biggest hurdle that you need to overcome to take you to the next level?
NCAL, thank you so much for the question. It's not tech. We don't believe. We are delivering 98% retention across all our products. We did go public on the NASDAQ, and we feel that we're buttoned up. We feel that the biggest challenge in front of us is sales and marketing, to scale sales and marketing and get in front of the customers who can buy our product. We like our position in the marketplace. We like our pipeline. We believe that when we get in front of people, they see the solution and they understand its merits. And so that's our next big push. Absolutely.
What is your I guess I'll just follow up with him, because I was sort of thinking about what you just said and what he's asking right now. But you talked about your retention rate. Can you speak a little bit about like just the growth rates right now, where you're growing, how you're growing?
Yeah, we're announcing deals as we close. We have deals in all 4 segments. We think that enterprise is likely to be our biggest segment, just because there are so many companies that need a learning solution. We've been successful in the nonprofit space. I mentioned some of those organizations. So we have different kinds of things that we're closing now.
Yeah.
Some things that we're closing are for organizations that have never had a learning system, and we build out the whole ecosystem. Other organizations have other quote unquote learning management systems, and they want something special. They want something more deployable. They want something more effective. So either way, we can sell into the marketplace as either a complete holistic solution or as a solution for special training.
Right. And so I would imagine for like the more complicated, more white label-y customized, so that's expensive for you to develop.
You would think so, but actually the secret is to build the technology right. Amesite is a fully modular code base. We are a Microsoft partner. We are delivering right now on Azure with what we feel is very high efficiency. And because we built the technology right, we can stand up a complete ecosystem in as little as 24 hours, branded to the customer. So the key there in deployability is to have good technology, have good infrastructure, and we believe we have that.
And then in terms of the business model, how does that work? Is this like a SaaS thing, or is it a one-time, or is it both?
It's a SaaS model essentially. We have a setup fee, we have an annual license fee, and then cost scale as users, and the cost to our customers goes down as their user base goes up. The next thing we're looking toward is closing deals with brands that can scale and deliver learning, because we generate revenue both by license fees and by customer scale. So both things are important to us. Our fate is very much tied to our customers. We are here for our customers to win. We don't bid our customers off of one another. We don't deliver, nameless catalog solutions. Instead, we build ecosystems so they can be successful, and we're very proud to do so.
Have you considered a near-term future where, like, best case scenario for the world, like COVID really does start to go away and there really is a lot more in-person stuff? Have you considered how that would affect the business at all, or are you just bullish on the ideal? You think we're not going back to the way things were?
Oh, life will constantly change, but one thing won't change is people will demand greater flexibility, and online training is the only way to upskill professionals continuously. That is the only practical way ahead. We don't think little kids will be sitting in front of computers. We never have thought that. That's not where our business footprint is. Our business footprint is really in professional learning, and that we believe will be almost 100% online for sure.
Man, NCAL with the questions today. Holy moly, man.
Yeah, go for it.
I guess, can you speak more to like the challenges on the marketing and sales side, if that's your biggest hurdle right now? He wants to know how you're addressing that.
We're addressing that by partnerships, by building out our sales and marketing team, by delivering more assets to the marketplace. If you look at our website, we deliver ebooks and blogs and so forth. And we take a teach, sell approach. We put a lot of information out there. Our customers and customer targets really appreciate that, and that gets us recognition. We believe that once we're in front of people, we're very successful. So now that we're building volume, we're building more shots on goal.
Yeah. And then I would imagine just the biggest catalyst would basically be deal announcements, right?
Yeah, absolutely.
Right. Yeah.
You know, when we have an endorsement from people who know technology, from people who have brands that can scale, that matters to our customers. If you look at our case studies on the web, that's probably our best asset, which is what we deliver for our customers. So it's not us saying it about ourselves, it's our customers saying it about us. And we're very, very proud of that. Team works very hard for this. If you just go to www.amesite.com, you can look at those case studies. They're short videos and they're very informative.
I'm just wondering, Anne-Marie, are there specific, like from the client side, are there specific features or needs that you're seeing are just the most reoccurring things that everyone is asking for? Because I don't have kids, and I'm not in school at all, so I've never really experienced remote learning at all, right? In the last couple of years, I'm just wondering if there are any things, whether it's from your government customers, your school customers, your professional, your customers, if there are recurring features that you have or that you don't have that are most asked for.
It's a great question, Spencer. If we take you as an example, journalism has changed dramatically in the last 10 years. Professionals need to upskill constantly. And so being able to consume learning experiences that keep you ahead is very, very, very important. When you look at government, higher ed, enterprise, and nonprofit, many of the features that they require or they want are the same, but they can't get them in the marketplace right now. They come to us as a disruptor. Some of them include streaming video, the ability to chat, the ability to communicate, the ability to do labs online, the ability to do group projects, the ability to whiteboard, the ability to live stream, the ability to integrate with other pieces of code across the enterprise so that L&D is not isolated in a silo, but can integrate with other data that the enterprise needs. And of course, having dashboards, being able to look at the outcomes of learning and be confident that you're generating not only high retention, but also good learning outcomes. Amesite delivers all those things because bottom line, we're the last mile. We care deeply about learning outcomes. We care deeply about making sure that people have a good learning experience. The reality is that anybody who says they care about education, but doesn't pay attention to retention is not paying attention to the right numbers. The first job is to keep people in the learning experience, to compete for their attention. And that's what our technology enables us to do for any organization.
Is there ever a scenario where there would be like a direct, I don't know how this would even work, but like a direct B2C offering? I'm not even sure what that would look like, but like, is that like something that you like think maybe down the road?
We haven't announced anything about that. We haven't discussed anything about that. Really, we're focused on our B2B and helping our customers generate that B2C sale.
Got it. It's a good point, Robin, in the chat about natural language processing and AI. I mean, she's asking how do you ensure that the AI recommendations are actually accurate and working? It's a good question.
Yeah, that's a continuing job. Yeah. Anybody who's using the technology has to develop methods both off the shelf and proprietary to make sure that's true. One of the ways we do that is look at our user feedback. And that's the most powerful way of informing algorithms, to answer your question.
Yep. I guess we'll just wrap it up with this. I was looking at this the other day as well. You're in terms of your cash on the balance sheet, you said you have, I think it was less than a year of runway. I think I saw that was what I saw.
It was more as of our last Q. So we have good liquidity. We have cash on hand, and we think we're in a good position to scale. Have you considered raising money? Is that not even a thing right now? We haven't announced anything about that. That's the political correct answer. That's the answer that doesn't get you trained well. Years by your attorney. How about that? That's true. You've been trained well. So we're what? We're great attorneys. We're 5 years into this journey. Is that right? No. I founded the company at my dining room table November 17. We raised the first financing in 18, so a little under 4 years. A little under 4 years.
And I would imagine the pandemic, like a lot of companies, just frankly accelerated the growth.
I have to say, when I look back over the last few years, I'm incredibly proud of this team. This team has built a culture and a technology that are award-winning. We've won 10 Workplace Excellence Awards, 4 of them national. We have people in 14 states working on everything from finance to technology to sales and marketing. And we've built products that we can be proud of. If you look at the case studies, you can see what we're doing for our customers. So we're very bullish about the future. We're very optimistic. We like our pipeline. And we think that the team did things the right way. We really focused on building a great product, and now we're focused on getting loud in the marketplace and getting this solution out to the organizations that need it.
Nutty Bitch just asked if there's any truth to the partnership with Microsoft. I mean, yeah, right. I mean, there's truth to it, right?
it's true. I think, sometimes I can understand sometimes skepticism, but we are a Microsoft partner. We are an education specialist, and we are live in Azure Marketplace right now. So our services are delivered on Microsoft Azure, and we are available as a viewable solution to people who purchase software on the Azure Marketplace as well. And you can see the quotes, the press release from Tamer at Microsoft. Microsoft's been great to us, and are obviously committed to making sure that all our partners can grow, because Microsoft wins when that happens. When partners consume more resource on Azure, Microsoft wins. So they're very interested in their independent software vendors being successful.
Anne-Marie Sastry is the founder and the CEO of Amesite. Again, the ticker up on the screen. Check it out. If online education, if you think it's the future, because there's real reason to think that it is.
Yeah, absolutely.
Anne-Marie, a pleasure to chat with you. You're getting a lot of compliments on your background. So congratulations on that. But congratulations on the company and on the growth. And you've had an exciting few years, and we're looking forward to following the progress.
Absolutely a team effort. Shout out to my team. And Spencer, thank you so much for giving me some of your time. And thank you to the audience as well. Appreciate it.
All right. Have a good one. All right. We're running a few minutes late, but what else is new on here? Frankly, it is what it is. My next guest is here, though. I want to bring him on right now. We're going to switch gears from online education. We're going to go over to healthcare biotech right now. We're going to talk to Journey Medical and their CEO, Claude Maraoui. I spelled his name out phonetically so I wouldn't screw it up. Claude, how did I do? Did I do a good job?
Oh, that was perfect. One of the best I've ever heard, actually.
That was fantastic. So, Claude, we're talking Journey Medical. Ticker is DERM, and you're obviously in the dermatological space. So before we get to that, I always love asking how executives came to be at the companies that there are, whether they're founders or whether they came out of retirement. Well, real quickly, what was your journey here to get to Journey Medical?
Yeah, absolutely. Interestingly enough, I had a very great career going at a company for 22 years, really enjoying myself, contributing, felt valued. And then just one of those corporate asset purchases, acquisitions. So I was with Medisys for 22 years, and a company now owned by Bausch came and acquired the company. I took a package, a 1-year executive package. At that time with Medisys, I was heading up sales and did some marketing leadership, and had to decide what to do. I had 3 young children. I liked where I was.
Yeah.
Medisys was headquartered here in Scottsdale. And I put together a business plan because I saw that there was going to be a gap and need for a strong therapeutic medical dermatology company. And in essence, that's how I became the founder, president, and CEO of Journey Medical. So, it got purchased, and then I had to do something. And as I looked at the landscape, it just made a lot of sense to start up my own business.
So let's talk about, you guys have a lot of products. So first, let's talk about the products that you have currently, and then we'll get to what's in the pipeline right now.
Sure. We have, like you said, a number of therapeutic agents. We have Targetox, which is a doxycycline hyclate, 50 milligram. It's for acne. It's an oral antibiotic. We also have a sister, a cousin, if you will, called Zamino, and that's as well for acne. It's weight-based dosing, minocycline extended release. And then we also just picked up and started to launch in 2021 Accutane Isotretinoin. That's a very well-known brand. It's been off the market for 10, 12 years. We brought it back and just launched that. And that's for the most severe recalcitrant cystic nodular acne. You feel bad for these patients when you see them in a grocery store or when you're just walking out and so forth. It's horrific, and this is the drug to really help clear and conquer the disease.
So on the Accutane note, because you mentioned it was off the market and you brought it back. I think what I was reading about it, one of the biggest things was always the side effects, right? So how have you been able to mitigate that?
Sure. So just to give you a little background, this particular category, isotretinoin, Accutane was originally came into the market back in 1980, 1982, and along the way, it's lost its patent over the years. And now, when you take a look at the market, there's about 7 isotretinoins out there. It does have serious side effects, especially if pregnancy issues in terms of birth malformities, if pregnancy happens. So you have to be extremely careful with that. The government, the FDA, has put a REMS program together, a safety program, in order to make sure people follow and abide and have stringent rules. So, for example, females have to have 2 pregnancy tests before they can get the prescription filled at a pharmacy. A pharmacy has to be qualified and authorized to be able to dispense it. Wholesalers have to be qualified to dispense this. So all along the way, there's certain parameters to help minimize that potential. There's also some other side effects, but I would say that is the number one that you have to worry about.
All right, so I sidetracked you there for a second. Finish through the products.
Sure. We just purchased recently a product called Cubrexa. It's for primary axillary hyperhidrosis. What that means is excessive underarm sweating. It's the first and only of its kind. As you can see up on the screen, it comes in a towelette. There's 30 of those in an individual carton that individuals will pick up at their pharmacy and use it. Just a 1 wipe on each side, throw that out, discard it, wash your hands. And it's got high satisfaction ratings, well over 70%. It's really a dramatic drug, and it's well established. We just picked this up from Eli Lilly, a subsidiary there called DERM. We've had really solid growth. You can see the blue line up on the screen. Since we picked it up in May, we've had strong growth, up to 12% year over year. And we have 42 salespeople. This other company that had it had close to 100 salespeople. We're able to take our keen expertise and target with precision and really lift the market up nicely. We've done that with all of our brands, Stephen. I mentioned Targetox, Zamino, and this other product called DERM. It's an antifungal. We have been able to rise and become number 1 in each of those categories. Right now, with Cubrexa, we are number 1 as well. So we like where we're going. We have a lot of momentum, a lot of growth.
I want to talk about this next slide here. Can you speak a little bit more broadly just about how much money, how competitive is that space, or the dermatology space right now? How much money is flowing in? What does deal flow look like right now? All that sort of things.
Sure. One of the things as I opened up the company and started to establish ourselves and put our footprint in dermatology, we had to look at the landscape. And this is the most recent view. We do this each year, but most recently, there are well over 450 programs in development, specifically in dermatology. And when we take a look at that, well over 100 are in phase 3. So that's the last stage of clinical trials before getting hopefully an NDA, and well over 200 in phase 2. Many of these programs are done by institutions, R&D companies. They are looking for commercial partners. You can't help, when you take a look at this category, to see that Journey Medical has established itself so well. We are in regular contact with many of these potential partners, and launching a brand and being successful in this very tricky maze of dermatology. We are getting lots of calls, and potential partnerships are in play. I can't guarantee that, but we've been doing a great job, and this opportunity really sets the stage for the future in dermatology. So to answer your question specifically, there are many deals out there, many opportunities. In the last 10 months, Stephen, we have launched Accutane. We have acquired and launched Cubrexa. We just purchased and acquired one of these development programs from your screen there on this slide, our first R&D phase 3 development program in rosacea. It's called DFD-29, and it will be going head-to-head against the market leader right now. And in that market, there happens to be $360 million worth of sales just in 2020 with that one market leader called Oracea. So we are right now in phase 3 clinical trials. We have an investigator meeting set up for us this month, and we're anticipating first patient in February. So we're very excited. A lot of companies are looking for products that are 100 million, 500 million, really in $1 billion or more. We are set very appropriately where if we are able to get our hands on a product that's well over 50, well over $100 million, which DFD represents, it really puts us in a great position.
Yeah, so I want to actually bring up that slide here. So looking ahead, you already sort of answered it, but can you just speak as far as specific as you can get as to what the timeline looks like for the program, for the drugs in your pipeline right now? DFD, you just sort of already kind of addressed that.
Sure. So if you don't mind, let me just kind of establish the foundation here. On the bottom left of the screen, you'll see great sales numbers, net revenues starting in 2017, leading all the way up to 2020. We call that our financial foundation pillar. So we've established ourselves with our legacy brands, and I mentioned some of those: Targadox, Exelderm, and Ximino. On top of that, we're going to fuel and really thrive in our growth with our new launch brands, Accutane and Cubrexa. And most recently, as a matter of fact, just about a week ago, we acquired 2 additional products. These are 2 commercial assets that are available in the market. They're called Amesite and Zilxi. Amesite and Zilxi are topical minocycline foams. Minocycline's been around for about 50 years. This is the first time this AMST platform technology was able to stabilize minocycline. Nobody's ever been able to do it. Many have tried. We're very pleased to have these 2 assets, one for acne, one for rosacea. So we're a plug and play organization. We've built a great infrastructure. We have approximately 85 salespeople across the country knocking on the doors of dermatologists, PAs, and NPs. And this example of Amesite and Zilxi, we just purchased them. We will start to launch those in February, and we're looking for great results with those as well. We're also anticipating, to your point, an additional product. It's an anti-itch product. We think it's going to be well suited in the marketplace of dermatology. This has no steroids, no histamines. So when various dermatoses flare up, typically dermatologists will control those with corticosteroids, topical steroids. Once that's under control, you really want to take the patients off of those steroids. This product will have a nice niche in between flare-ups and control that. Very clean formula. When I mentioned, go ahead.
No, go. I'm sorry. Go ahead. Go ahead.
No, you mentioned DFD. That's our
Yeah.
first cornerstone asset. We just acquired this at the end of June last year, and we're thrilled to be putting it through a clinical development program. We've partnered with Dr. Reddy, a huge organization that has many wins and many NDAs under their belt. We actually picked up their clinical development doctor who's heading up our program here, who started DFD. So we feel very good about the potential.
I was actually going to ask you about that. So when you announced the Dr. Reddy partnership, I think in June of last year, and at the time you said that the first patient is expected to be dosed in Q1 of this year. Are we still on track there?
Yeah, certainly. We are certainly on track. It looks green light all ahead. We've already identified all the sites for the study. There's 2 studies that will be taking place. Like I mentioned, the investigator meeting's going on this month in about a week. And from there, we'll start patient recruitment, and first patient should follow suit shortly. Do you mind if I just give a little background on this product, which I think is really highlights the potential?
Yeah, go for it.
Yeah, this has clear differentiation in the market leader. It was tested in phase 2 studies. 2 primary endpoints were looked at: IgA success and inflammatory lesion reduction. This is exactly the way the market leader did its trial, and this was replicated with DFD-29. Almost double the efficacy in IgA success, with probability values that are superior, and hopefully they will certainly, we believe, replicate in the phase 3 trials. And then double the efficacy once again in reduction and clearance of inflammatory lesions. So there is a strong need for this for rosacea patients. We believe it'll be very well accepted with physicians as well as with payers, because that's an important role here. Getting access to patients for innovative new technologies is important, and we believe we'll have great scientific evidence for that to be accepted.
Can you go a little bit more on like what exactly like the new technology is?
Sure. DFD-29 is a modified minocycline technology. It has immediate release as well as extended release combined together. And that is how we have been able to demonstrate currently that it is extremely well tolerated. Safety side effect profile is very comparable to the market leader, Oracea. So it's great innovation here.
Something else that I was thinking about, when looking at your companies and thinking about just dermatology in general, is a lot of treatments, and we sort of touched on this briefly. Are temporary, right? There's maybe no like long, or maybe they're all long-term treatments as well. As far as your portfolio here, what is the breakdown of like treatments that are like temporary versus the ones that are more long-term?
Sure. Yeah, and it's different. When you look at our entire portfolio, it's definitely different. So let's take a look at some of the acne products. For example, Accutane. Accutane, most dermatologists will go by the indication and what's on the PI. It's approximately a 4, 5, 6 month period of time. So once that's done, and if it's dosed appropriately, and it comes in 4 different strengths, that patient really resolves, and their treatment typically is successful. So you get about a 5, 6 month usage out of that. And we like that aspect of it as well. When you talk about antibiotics like Targadox and Ximino, you are typically talking about anywhere from 1 month to 6 months. The American Academy of Dermatology came out with guidelines a couple of years ago. They're trying to make sure that antibiotic resistance is minimized. They're suggesting 3 months. And again, dermatologists are like artists. They really vary on how they use things. Now, when you talk about Cubrexa, that is a product for excessive underarm sweating. That could be used for the extended. We have studies that show it well into that 1 full year mark. That's as far as we've gone out. So you're talking about a product that can be used a year or longer if the dermatologist believes that and the patient wants that. So it really does vary. Our antifungal, for example, Exelderm, that could be just a couple weeks. That could be just a quick temporary hit. So we really do vary in the entire portfolio.
Awesome. Any questions from the chat? Please drop them in. Speak now or forever hold your peace. And then just Claude, just looking super short term here. What is the next catalyst, the next news event we can look forward to?
Yeah, great question. Like I said, there were so many different things that we've been able to accomplish in the last 10 months. This company, Journey Medical, is not on its heels. We're on our toes. We're moving forward. We're in various discussions with numerous companies right now. We have business development meetings constantly, each and every single week, trying to assess and figure out what the best next strategy is to add on to our pipeline. We've really morphed. When we first started this company, we started with ANDAs. We've now progressed to NDAs with strong patent lives, clinical differentiation. We want to add on to that pipeline and really start to develop products as well as add on, bolt on potential commercial products. So our strategy is very sound. We're going to stick to that. I'd love to tell you what the next deal is, but obviously forward-looking statements, I'm limited in what I could say, but I can tell you this: highly active, and we like our position.
Awesome. Claude Maraoui is the CEO of. Actually, before Claude, before I let you go, if I can, I have your CFO in the background, Ernie. Ernie, do you want to hop on for a second? Do you have anything to add? If you're good to go, raise your hand, and I'll bring you on here. No, I said you're all good. All right, Ernie's all good. Ernie's all good. I just wanted to check. I see you lurking here. I can't hear you right now. You're on right now, Ernie.
Okay, great. One of the things that I also wanted to mention that Claude alluded to is that financially, we just had our IPO. We went public with a $31 million raise, and that is for the development of the DFD as well as to strengthen our marketing and sales, as well as to give us the ability to purchase other assets like the Vine asset. And during the Vine asset, we also went from $7.5 to $30 million. So we're a company that has a strong balance sheet, and we've had great sales. So we're stoked to go with these acquisitions and to execute on our current operating plan. So that's all I wanted to add.
All right, Ernie, Claude, we're talking Journey Medical. Guys, thank you so much for joining All Access today. And have a great rest of the week, a great rest of the day, great rest of the week, great weekend. And we're looking forward to following progress.
Thank you, Spencer. Thank you. Appreciate it.
All right. Ernie and Claude. Okay, we are waiting for our next guest to show up. But let me just sync up with them real fast. Okay. Let's bring up my chart here. Sorry about that, everyone. We got a few minutes here before our next guest is going to stop by. So I just saw someone in the chat say, Anthony, we're breaking down everywhere. Is that true? All right, let's see here. I was a little bit all up in that interview to be paying attention to the market here. Yeah. That's not great. Not great here. Oh, man. All right, let's bring on some charts. Let's just look at some charts for a second here. Let's get that off the screen. We'll go to SPY. Start there. Holy moly. Oh, boy. Okay, so, again, this is yesterday's close. This is today's open. Qs. Wow. This was the question that we were wondering. I was wondering. Many people were wondering, what's going to happen if like the mega caps actually start to really break down technically, right? You're seeing Apple. I see Apple there, Mitch, but it's not just Apple, right? I'm talking Microsoft. talking Amazon. And there was two schools of thought. Wow, look at that. Look at Amazon today. Holy cow. You guys see that? Of course you do. Dear Lord. I don't even know what to say to that right now. So again, there's two schools of thought, right? It's like, okay, big tech is going to break down. Obviously, they're heavily weighted in the broad indexes, so they're going to bring the indexes with it. But does that coincide with like a comeback in all the other stuff that was so beaten down? Like in other words, does money rotate out of the mega caps into like ARK, for example? That was just a theory. I think now we know the answer. The answer is no. The money is not rotating into growth tech from mega cap tech. Yeah. Holy cow. ARK is down 4%. I don't even know here. How's Microsoft doing? What's Tesla doing? Money is leaving. Yeah. How's the PLT doing today? Banks are getting smacked, I bet. Okay, the timing of this is so interesting too, because earnings season, right? Well, like next week really is the first big week of earnings season. We have so many reports next week. We can go through it later. So many reports. Fundamental information. But does it matter right now? Do the fundies matter right now? Even if it's good news? I don't know. I don't know if they do. How's Ford doing? Okay, let's stop this. Let's just do this. What is up today? Well, let's start there. What is up? Overall market, staples. Okay, staples, REITs, utilities. Great. Let's just start there for a second. XLP. Largest weightings in the XLP are like Coke. It's up today. Pepsi is up today. There is some rotation. Campbell's Soup. There's rotation. Let's not act like there's no rotation. There is some rotation. Okay, let's keep a close eye on all of this. Okay, I see everyone in the chat. We're going to keep a close eye on this, but I see our next guest here, so I want to bring him on right now. Ron Andrews. Ron, I see you. I apologize for the confusion. Totally our fault. Ron Andrews is the president and CEO of Oncocyte. I want to take my charts off the screen here and bring Ron on the show. Ron, great to see you.
Good morning. How are you?
Good morning. I think we sent you to the wrong place. Our bad. Sorry
No
about
worries.
that.
I was hanging out there having coffee.
I know.
It's early out here in California.
I bet you were. Anyway, so I said this off the top, Ron. You came out of retirement to work at Oncocyte. So tell us a little bit about your journey and why did you do that? You were living a great life, I bet.
Well, I was raised by a grandmother who had breast cancer a few times in her life, and she challenged me to get out of a small town Georgia and actually be the first of our family to go to college to chase sort of the dream of cure.
Right.
And so I had been blessed with some opportunities to do that. We had worked through the genome world. We had built a couple of companies around large scale genomics for testing to help patients with cancer get the right drug. And I realized that, DNA was important to that knowledge, but DNA codes through RNA, and the whole world of RNA technology began to explode. And I was sitting on the sidelines, and to be candid, I just felt like that all the experience of all the mistakes we made trying to bring the DNA testing to market, that we could obviate those mistakes with the right team. And so I stepped into Oncocyte 2.5 years ago, really with a vision of putting together a series of tests that answered questions that still remain for physicians when they're treating patients with cancer. And I also wanted to do it in a way where you could put them in kits, put it on an instrument, and put it in a community. I mean, even today, after 20 years of knowledge around the genomics of cancer, a patient goes to a local community doc. That's where they enter the system. But it can take 2 to 3 or 4 weeks to get the testing back, and they need to make a decision. Cancer doesn't sit and wait till these tests come back. And the best way to really impact patients is get the right test with the right information in the hands of the local doc so they can make the decision local. So it was a challenge that I felt like somebody needed to take on. I had a group of folks that want to come along with me that have been with me through a couple of other journeys, and here we are.
So at the end of the day, we're talking about testing for cancer, right?
We're talking about patient knows they have cancer. Now the physician needs to know, what drug do I give? The beauty of today's world versus 20 years ago. 20 years ago, you were looking for a needle in the haystack. And so what'd you do? You give them chemo and burn down the haystack. And somewhere in there, you hope you got the needle. But things have changed in 20 years. We have a whole series, a pipeline of targeted drugs that target the mutations that drive tumors. And now you have a whole genre of immune therapies that are really game changing when given to the right people at the right time. So it's in that knowledge of what test to give or what drug to give when is only driven by diagnostic test. And that's what we do. We are an emerging leader in providing that information in the hands of physicians. And so if you see this slide, what we decided to do was to break each question into a single question and a single test. Large scale genomics tries to answer all this with one big test. And we found out after 15 years of chasing that dream, it's prognostic, but there's no precision into who will or will not respond. And so unfortunately, after all these years, we give a patient a drug and typically 30% of them have a durable response. The rest of them need a second or third or fourth regimen to survive. And so we took a different approach. We said, let's ask the individual question, is it chemo? Is it a targeted drug, or is it immune therapy? And so we spent the last 2 years building these products, and this is our coming out year. We're launching all three. Determa RX is on the market for do I need to give chemo, but we are in the process of launching Determa IO, which identifies patients that will respond and have a durable response to immune therapy, and Determa TX, patients that need a targeted drug. And then we're complementing that with the Determa CNI, which says, hey, I gave a patient a drug, but is the drug really working? And instead of waiting 8 weeks, 10 weeks, 12 weeks till you get an image and realize, oh crap, the drug didn't do anything for the patient, at the second cycle of therapy, we can tell them, hey, the disease is still progressing. Change the therapy now to save the patient's life.
So let's ask the obvious question, Ron. It's so difficult. How do you do it?
We take large scale genomics, Spencer, and what we do is we really use these large AI engines and the ability to now narrow down. Gets a little wonky science wise, but we take this large scale genomic profile and we can narrow down to small targets within that big profile that basically tell us what the big genetic panel does, but tells us what the RNA or the coding part of the DNA is doing. And that is what we use. We use those RNA signals to tell us, is the drug going to work or not based on what's coding? And it's proven to be pretty powerful. Determa IO today, through all the trials and studies we've had now, far surpasses the current standard of care for testing to identify, am I going to give a patient a $200,000 drug, and are they going to have a durable response? Or am I going to give them the drug and find out in 2 months it didn't work, and now I've got to find another drug, but now I've excited their immune system, and there's about 35% of those patients end up with a latent autoimmune disease. And so our goal is to really create precision answers for physicians at the earliest point into the disease cycle, so the best drug can be given early and give the patient a chance to live.
And we're talking all cancers, all stages?
Well, right now, our focus, ultimately, we will be all cancers. You have to, in my world, you have to start with the ones that you can get the samples, the patient samples. So we're in lung and breast today. Obviously, the TX panel is all mutations, so that does cross all tumors. But for Determa IO, we're validated in breast and validated in lung, and obviously we're close to bladder, we're close to colorectal, so we've got more coming. But right now we're launching for breast and for lung.
And these are all through the pipeline, right?
These are through the pipeline. Everything in the treatment decision bucket is through the pipeline and coming to market in Q1, Q2 this year. Determa CNI, as you'll see here. Our goal really is to give physicians the answers they need when and where in the journey. Today, I've been very fortunate. I've lived through the last 20 years of watching cancer go from a deadly disease and being a part of providing answers that helped us make it chronic. But the only real way to make it chronic is to identify when that tumor changes, and they do, when do I give the next drug and what is the next drug? And so our whole strategy is to have all the tests we need through the continuum to give the patient the right drug and then monitor. So you'll see the middle of this slide. If it's a later stage cancer, they can't do a surgery. Later stage cancers are already metastatic. So usually you treat the primary tumor, but you also have to treat the metastatic disease. And so what we do here is we run Determa IO and return TX. We can decide, do we give them a chemo, do we give them a target, or do we give them a combo? But then immediately we start monitoring in blood. So if that patient's not responding by the second cycle, we could say, doc, stop. We need to change therapy or you're going to lose your patient. And so our goal is to create a chronic disease out of this deadly disorder by picking the right drug first and then monitoring for its efficacy.
Yeah, that the monitoring part seems to me would be like the most difficult and also the most critical, because you could do it once off the hop, but can you do it again and again to determine whether the drugs are actually working? Because you can point them down a pathway.
Yep.
That doesn't mean necessarily that it works, right?
That's right. And so what we do is we take without getting too scientific, we look at certain pieces of the gene code of cancer and we monitor that over the first 2 cycles. And if it doesn't change, if that quantification of that mutation doesn't change, then we know the drug's not working. And now we've proven that out. We have a better than 93% positive predictive value at the second cycle, telling a doc that drug's not working, you need to change therapy. And we believe that is what the market needs to really make cancer chronic.
What are the hurdles here? I'm just trying to understand, or the indications. Well, not the indications because you already passed that, but what are the hurdles here?
Yeah, the hurdles are obviously the clinical studies we need to validate across all tumors. The challenge we have today, and it's the same challenge that we have in the drug world, is, patients, as you'll see on this slide, patients enter in the big blue part of this pyramid. They enter in their community, they enter in the region, but all the testing, because it's so complex today, is up in that top part of the market. So they either don't do it or they send it out. It's expensive and it takes a long time to get it back. And so what we've been needing for a long time was a simple instrument that could allow the local lab with regulated kits that are FDA cleared. And you ask, what's the long pole in the tent? It's that FDA clearance process to move this down into the community. And so we just announced this week an amazing opportunity, a relationship with Thermo Fisher Scientific. They are the world's largest manufacturer of molecular instruments and kits. And they needed our content because they build instruments. And so their engineering firm, they have a gene chip that's quite phenomenal and certainly cutting edge. And they needed tests to go on their instrument because that instrument is so easy to use. We're going to be able to put it in every hospital versus it stay in these large reference labs. So docs locally can run tests locally. And so for us, it's a huge opportunity for a small company like us. It gives us a 14-year development contract with double-digit annuity revenues over those periods for tests that we'll develop with them. And you can see for a little company like us, once we get these kits through the FDA, once we get our tests through the FDA, the first 3 years, you start to scale this revenue. And if you start tallying on the cumulative revenues, we're projecting for that first 3 years after regulatory approvals, over $100 million. So we're very excited. And this is incremental revenue to the work we're doing in our lab developed test world today.
So the Thermo Fisher partnership, does that go for all? I have the wrong slide up. I want to go back to this slide. Does that go for all?
It does.
Okay.
So we can develop. The beauty of what we've done through the years is we knew, I took that team that would help me develop what Thermo Fisher does today, these large scale genomic panels. And I brought a world-class team here to say, let's take pieces of that and create these smaller tests that can go into kits and be deployed. So we built this menu to go on an instrument. We just didn't know whose it was going to be. And then obviously when Thermo spent the $100 million plus to build a fully automated walk-away instrument that can be sold to your local hospital, a community hospital, so that now when you go see your local oncologist across the street, they can send the test and they can get the results back within 24 to 48 hours, not 3 weeks.
So you've obviously shown by the fact that you got these drugs through the pipeline, you've shown that they can work, and now you have the infrastructure in place or the partnership in place to go out and actually sell it. So what's missing here?
Yeah, right now it's just getting the products through the FDA. It's really getting these kits tested, do the clinical trials to get the kits through the FDA. We have launched these tests as lab developed tests. So like the other big reference labs at the top of that pyramid, we are one of those. So we are launching our test in our lab. People will send us the samples until we get through the FDA. And then the goal is when we get through the FDA, or in this case right now, the real opportunity is in Europe, because Europe is ahead of America in terms of practicing precision diagnostics for selecting drugs. And so right now in Europe, there's a real push. Thermo Fisher's launching their instrument into Europe. And our tests are very important to the menu that they need to really have success. And so we're really all working rapidly now to get our kits through the regulatory process to submit those for European regulatory body approval. Once that happens, that's when those revenue streams start. And obviously the next year and a half, 2 years is going to be, a lot of development work and a lot of clinical trial work with Thermo, but we're very excited about the relationship. A little company like us, we could have never done a global expansion without an instrument platform. And the fact that they had the courage to make that investment, because it'll take them years to pay back that instrument investment. But we're certainly fortunate to have compelling content enough for them to enter this exclusive relationship with us.
So it goes Europe first, then US/North America?
Correct.
Okay. Why is that? Why is Europe so ahead of us in that regard?
Today, right now in Europe, today in America, patients come in and we just give drug, and we do some testing, but because it takes so long to get it back, it's not necessarily what they use to make the first decision. Versus in Europe, because they're value based, they don't want to spend $200,000 on a drug that's not going to help a patient. And here, we do that every day, and only 30% of the only 30% of the patients, sometimes children, get a response. And so that 70% get drug, but it doesn't work, but they don't know it till it's the end. That's why monitoring in the US becomes so critical. In Europe, they do all the testing up front, and they want it local. And so today, we want to be a part of taking these tests local and helping local, regional labs in Europe have access to these important tests to drive the right therapy decision.
So then what, in terms of I always ask this question, I asked it of our last guest as well, in terms of the super short term, what is the next thing? What's the next?
For us, clearly it's launching all these tests in the United States through our lab in Nashville and through our lab in California, and making these game-changing precision tests available to physicians. We will use FedEx and UPS, and we'll do the overnight thing. And the beauty is our technology, unlike next-gen sequencing, which takes a long time, we use these targeted opportunities and these gene chips that are very targeted, and the turnaround time is a couple of days. So we get it. It's going to take us 5 to 7 days to get it processed and results back in the file. But this instrument here, the Genexus, as you see here, that Thermo Fisher is invested in, this is really the holy grail ultimately for us to democratize, or what we call decentralize the world. I mean, Spencer, today, when you go to your local doc, they draw blood, they run clinical chemistry tests, they run your blood count, they run your immunochemistry test, how's your thyroid, all that's done in the local hospital. The last frontier for expanding utility and access is really this next-gen sequencing, these large-scale genomic sequences that are really driving a lot of the more complex decisions in diseases like cancer, like transplant monitoring, et cetera. And so we're very excited about what Thermo's done, and on the backs of their powerful global sales organization, we'll be putting our kits on this instrument.
But as far as timeline now.
Yeah, so this year we're launching our Determa IO, Determa TX in the first half of the year. We're launching Determa CNI as a research use to get the clinical world engaged with the blood-based monitoring. All that's happening in 2022, and then obviously getting reimbursement for all those tests this year means we'll start seeing revenue inflection points as each one of those tests launch and CMS reimburses it. We'll start seeing those revenue inflection points as you go through the second half of the year, entering 2023. And listen, we worked for 2.5 years to build this compelling menu, and now we're ready to launch that menu. And the revenue ramp is still ahead of us, but we're through the hard part of all the development, and that's an important thing. And here you see that once we get through the regulatory process, ex-US, the market sizes for kits across our menu is significant. And so when you think about, well, Ronnie, I've had a lot of questions since we announced this week. How do you get to 100 million in revenue? That doesn't seem possible. And the answer is, well, we have a menu of tests that are going to be launched across a large installed base of instruments around the world. And Thermo Fisher is going to be selling those for us on their installed base, their instrument installed base. And we will get our kit revenue from that. And so it doesn't take long, given how big their installed base is globally, to start adding up the sales revenue for us. And so, again, very excited that we have a platform now. We're very fortunate that they've chosen us because there's not many instruments in the world built today that could handle the complexity of our menu, but theirs does.
Question here from our chat.
Yep.
How much of your money and time has been spent on the testing platform?
Yeah, so Thermo Fisher, if you go back, Spencer, to the Chevron slide, kind of the first slide you put up, I'll walk you through. So if you look at this, all of our energy and time has been spent on either acquiring companies that were early in the technology that could answer this question and bringing and integrating them in. That's been a lot of the time we spent. And most of the money that we spend is in the clinical utility studies to bring these to market, or the reimbursement studies to get them paid for. And so that has all been done. All that expense is behind us. And now it's commercialization expense for us. The next phase is this European regulated process where we got to go to clinical trials in Europe. But to be candid, because we're already engaged as a lab running these tests, already engaged with patients and docs that are sending us these samples, the investment is not as significant as many might think for us to take our tests today that are already being run in our lab and turn them into kits and regulate them.
Yeah, awesome. All right, learned a lot here. Again, we're talking to Oncocyte and we're talking to their CEO Ron Andrews. Is there anything we didn't cover? I'm trying to think here. I'm going through the slides. So there was one more we didn't get to, which was that bad boy. Kind of goes through the year.
Real quick, Spencer. This is just in December, because we've got so many things going on concurrently as a small company. Yeah. Our investors said, "Hey, Ronnie, how do we keep up with all this, and how does it all fit?" So we put this slide as a scorecard. We said, "Hey, we're gonna be bold. We're gonna put our scorecard out there so our investors can keep up with the progress we're making in 2022." So for those that are new to the company, I encourage you to go to our website and pull this down, and I encourage you to follow the story based on this scorecard. We got a lot to do in 2022, but we're on schedule for all these.
All right, Ron Andrews, President CEO Oncocyte. Ron, a pleasure to chat with you today. Have a great rest of your day. I'm looking forward to, hopefully not needing this one day, but I'm looking forward to following your progress.
Yeah, Spencer, I hope by the time, if you get old enough to have to need it, by then it'll be cured. So that's our plan, and that's what we're all working for. But thank you for your time today. Really appreciate the opportunity.
All right, thanks a lot. Let's just keep tabs on things here, and I'm going to bring my next guest on in a second. I'm going back to my Benzinga Pro though very quickly, just watching. Shelly, thanks for the props. I appreciate that. We have bounced though. Right? We've bounced. Let's pull up a SPY and pull up a Q. We've bounced a little bit. Let's see that. Bit of a reversal. 130 reversal, maybe. Oh, how's Apple doing? All right. Again, we're going to be doing this a lot more on Benzinga Live today, so stay tuned for that following this show. Let's bring on our next guest, though. I see her backstage. If you were watching Benzinga Live, what day was it? Was it Tuesday? I think it was Tuesday. We had this guest on our show, Chen. She's the co-CFO of Missresh. We talked a lot about they had a recent headline in that conversation. This conversation is more going to be just about what they do and then their business and how it works. So I'm going to bring on Catherine Chen right now, again, the co-CFO of Missresh. Catherine, welcome to the show. Thanks for joining us.
Hi, Spencer. Great to see you again.
So for those that were not watching the other day, tell us about Missresh. The business model is not one that we have. I don't know if we have a U.S. equivalent of this company right now. So explain the business.
Sure. So we are an innovator and leader in the China neighborhood retail industry. Basically, we are transforming the industry from the ground up by offering the innovative distributed mini warehouse model that you could see that there are similar companies such as GoPuff and Amazon Fresh, which we are offering a more convenient and faster services in China and covering a wider range of the cities. Now we're ready for the top tier cities that we're targeting top 30 cities that we are offering our on-demand DMW retail business. And now we already cover 17 of the mega and top tier cities in China, including Beijing, Shanghai, Guangzhou, Shenzhen, and also very live and fast growing second tier cities. Right. And also we are through our distributed mini warehouse business that we developed to our technology platform. So this is a chart showing how the model works. When you buy a fresh produce, you probably will see a big ice pack in the bag. Yep. But now we are using direct sourcing from the origin. So we have our around over 200 buyers nationwide and worldwide that select the best food for our customer. And then we ship them through cold chain transportation to our processing center, then to our mini warehouse, which located just within 3 kilometers from where you live. And this kind of mini warehouse is around 350 square meters large with multi-temperature zone and even the live seafood areas. So each time when you make an order, you will receive it just around 36 minutes. So this is so fast that basically you don't really need a refrigerator. You just order from Missresh and we'll deliver it very fresh and with full quality control to your doorstep. So just right before you cook.
So where are you sourcing the supply for your mini warehouses?
So for the sourcing, you mean the supply so mini warehouses is dark stores. So basically we select the location with very good route planning to the neighborhood communities and residentials. So basically we select the best location to be able to travel to these locations on an easy way. And we also have algorithms and AI-driven real-time order dispatching system help us to optimize the route. So the fastest delivery time is only 8 minutes. Depending on how far your resident is from our mini warehouse.
Right. So I assume it's like an app or a website, right? And you order off that, and then it just
yes.
Yep. Okay. So as far as how are you optimizing? How are you making sure that you're not eating the cost of expired goods or whatever?
So we have the strict quality control, and also because the fresh produce is of really short shelf life. So that requires a data processing capability that you have all the data, and then you are able to forecast the demand of the customers based on the weather, based on which day it is, based on seasonality and festivals. And then you're able to dispatch different kind of inventory level within different kind of DMWs. And also you have stringent control over the quality. Then you're able to manage that. You have a low spoilage rate, but at the same time, you're able to do strong quality control.
Right. And then as far as the delivery, who's doing that? Is that your own employees, or is this like a DD situation where people can join the platform, or what?
So basically, we are over 90% of the riders are our own riders because we have a pretty good we have commercial insurance for them, and we make sure they also pass all the healthy tests, etc. And only at peak time we may use around 10% from a third party platform for the rider support.
Okay. And there's just a question from the chat. This is interesting. I'm going to ask this one now. Roy wants to know, with having a large footprint, a growing footprint with all the warehouses, is fuel costs a concern?
So because for this kind of dark store, because we only need the location to be convenient, but we don't need it to be like a store that you need to beside the street. You need to have the fancy like decorations. The dark store is really simple. It's like you have the shelf, you have multi-temperature zone, like a big house for frozen and freeze, like a different kind of area. But the cost is actually not that much. Basically, roughly it costs around 500,000 RMB. That's around like that's around the 50,000 US dollar to build one of those kind of like dark store. 50,000 to 70,000. Yeah,
sure. And then as far as fuel costs, like for like gasoline, is that a major cost or not really?
Not really, because like for riders, like they all ride on scooters, so it's basically like electronic like scooters.
Yeah. Okay. And then as far as the footprint here, like the the footprint as far as the cities you're in, right? Because you named a couple. Is the eventual goal here to get into? I guess like how many cities is the goal? Because you obviously you can't be in like smaller villages. It's not economical, right? So what is the goal as far as your footprint?
So basically, like there are like around 49 first tier and second tier cities in China. So we are aimed to cover around like over 30 each of them. So basically, the most like prosperous, like the richest, and also with most like population density and with GDP per capita and consumption level per capita, those cities will cover using our distributed mini warehouse models. For lower tier city and the vast around range of like counties, we are using our like intelligent fresh market and retail cloud business to cover. Those are more like using technology platform and supply chain platform to empower the wet market operator as well as the supermarket operators. That will be more like a platformized, like instead of like self-operated business.
Okay, since you mentioned the retail cloud business, let's go there for a second. Explain that business exactly.
So basically, for retail cloud business, that is especially after COVID pandemic, many of the local supermarket, they suffers that they don't have online platform. The customers just don't go to their offline stores. So they were asking to us to see, can you open up your solution to us? Then we can deliver to our customers' home and we can operate our own like online supermarket. So for lower like tier cities and those counties like local supermarkets, actually this kind of supermarket, unlike that in US, this kind of supermarket has like 80% of market share in China. So only the top like biggest chain store only have around 20% of the market share. So toward those kind of smaller players, we are offering our like a solution which is called retail cloud services. That's included SaaS platform that's help you to operate your supply chain, your logistics, and how to do like sales and marketing. And also we offer them to build up their own like online platform based on mini programs that their like customers on neighborhood area can shop on their online platform, and they can utilize their own staff to do like order dispatch to send to the customer's home. So this is the full solution we are providing, and also we are empowering them with our supply chain because we can source the best food from nationwide and worldwide basis, where this kind of supermarket can't. They only have a strong local supply chain. So where they will utilize our supply chain to empower them. So we also like team up with Tencent on that, utilizing like Tencent Cloud.
Okay. So that I have two questions there. The first one, since you just mentioned Tencent, one thing I know about Chinese business is that there's companies like Tencent have their hand in a lot of different baskets, right? They're all over the place. So do you have investments from large companies like Tencent, Alibaba, etc.?
Yeah, Tencent is one of the major shareholder of the company, and we are the only company in this grocery like DMW world that they invested in. They hold around 8% of the total shareholding, so it's an important shareholder with strategic alliances.
And then I understand what you just said about being able to source better food than local farmers, than just beyond local, but still, like, how do you source though? Because that's still a huge challenge. So how do you? because you can source from more places, but you still have to source high quality food.
Yes, so we can, because we have this kind of we have the supply chain resources, and our founder, he actually started the agriculture arm of Lenovo Group. So we have very strong experiences and resources on the worldwide basis. Basically, for example, our cherries are from Chile, our blueberries are sourced from Chile. So we have pretty good supply chain capability to reach the best origins. And for example, we rolled out our private label product, which is offering the best grapefruit in China, which is that we actually from where it is planning and what specific category we should be selecting. So actually from the plantation point of view, that we already get into that supply chain side in order to make the best stuff out. And also we have over 200 Missresh farms that we direct source from, and over 350 Missresh factories that's we direct source from and have strong collaboration that ensure us we have a better food, better products than other retailers. So
you've got your own farm. You basically own a lot of your own supply chain. What is the biggest cost right now?
So we own some of supply chains. For others, we have direct sourcing relationship. Okay. Basically, we have strategic alliances that they only supply to us.
Okay. And then, what is your biggest cost center right now? Is it the AI? I don't know.
Yeah, so one of the biggest cost centers is in R&D that you see that we have spent a lot in R&D in the past, where actually the smaller supermarket and fresh market, they have no capacity to invest so much in this technology platform. So this is why that we invested so much, and we are opening that up. So you can see we're transforming from online and offline online and offline retailers to platformized player, where utilizing our technology platform and supply chain platform and our fulfillment centers like our DMW network to empower a wider range of the business.
How many users do you have?
So basically, for users that we have registered users over 200 million, in China, and we also have a MAU according to the third parties around 1,800 million. So 18 million MAU who are actually most of them are daily active on our platform, because they need to shop at least two times a week. So we're on weekly basis.
And just to compare that to something, can you give us what that, if you're at 18 million monthly active users and today, where were you a year ago? Where were you before COVID?
So basically, we see there's a surge after COVID, as more and more the consumers are adopting this shopping behavior. So you could see there's a transition in shopping behaviors. The old generation of people used to go to fresh market or supermarket, but now new generation people who are the millennials, that they don't know how to select a good meat. They even don't know how to clean up a fish. So basically what they do is they shop on Missresh, where they come with a good pack of the food, which are clean, already cleared. Then they just need to do simple things to cook a good meal.
Do you have competitors? I'm pretty familiar with at least the Chinese companies that are listed here in the U.S. And I can't think of another one like Missresh. It's not a company like JD or Alibaba. They compete. Do you have a competitor, or at least a public one? Or I can't think of any.
So in terms of competitors that we do, but basically because we have three business empowered by our technology and supply chain platform. So there's no one which is exactly like us, but maybe a part of that, you may see some of the comparison companies like for example, like we collaborate with JD as well, and also like we collaborate with like Meituan and other platforms that we are we have our like outlet on, we have our store on their platform as well, where people can buy groceries and fresh produce for fast delivery from us.
This slide says people are using Missresh 15 times per month, so like every other day.
So this is for our fresh market business. So in China, for the offline fresh market is where people go on daily time to buy for their daily like meals.
Okay.
So this is a very frequent visit and also offline traffic center that hasn't been like transformed yet. And it's really large. It's a 3 trillion market. So most of the Chinese people, especially in smaller cities, they buy at the wet markets where actually need they're endeavored for like digitalized transformation.
So wait, so what is the actual breakdown here? Which of the three businesses, which makes up most of your business?
So now, like on-demand DMW retail still dominate the revenue and GMV contribution, but we're seeing that intelligent fresh market and retail cloud business are like their asset light model. They are growing really fast. So maybe like 3 years later, when you see Missresh, you will see these three businesses of equal size, where the last two pillars of the business even have a larger empowered GMV.
Okay, and where is most of your investment going right now? Is it going into developing your AI, the algorithms that govern the business, or is it
so basically the investment goes in first, like we are still like upgrading and increasing density of our DMW network. So, and also like we are still investing in R&D in order to enlarge our platform to empower the intelligent fresh market and retail cloud business.
Okay, got it. Any questions for Catherine Chen or for Missresh in the chat? Please speak now. We've got a couple minutes left with them. Is there anything that I didn't cover? Is there any part of the business that we didn't get to that you want to explain?
Yeah, I think we also have a pretty good video. If we still have time, we can show that.
Yeah, I mean, so the video, I just queued that up right now. I figured we could talk over it because it's a little long, so I figured we could just kind of talk over the video as it's playing there. But like, what is the key selling point here? Is it the technology? Is it the geographic footprint? Is it like the business?
Yeah, like that's a very good question. So basically, like we see neighborhood retail are one of the very few like segment which is like quite large. It's like it will be around 2.5 trillion US dollar market by 2025. So 15.7 trillion RMB. So it's a very large market, and nobody like can see another segment as large as this one. And also the online digitalization penetration rate is really low. It's only 20% in 2020, but we see it will reach over 45% by iResearch. So basically it will reach, that means an additional 4.6 trillion RMB of digitalization market, reaching around 7.2 trillion like in 2025. So that creates lots of opportunities for us. And given that this market is very big, and actually like for companies like us, we can like have a pretty good market share and with decent size. So nobody can really monopoly this segment, but you have the strong quality, you have target the right customers. It's already big enough, and you can still have like a pretty good like expansions in all tier cities.
A question from our chat. They want to know about your projected year-over-year growth. Have you given any guidance? So the 18 million monthly active users is today. Have you given any forward-looking numbers?
So for the user numbers that we haven't give out like guidance, but for the revenue growth that we have already give out guidance in the third quarter that we'll have over 35% of year-over-year a growth like in the fourth quarter for our like revenue growth. And we will see that we'll have a faster growth if you're combining the intelligent fresh market and retail cloud business. The GMV growth will be like accelerating, and given the other two business model is expanding on the platformized like model.
Yeah. You said 35% is what the number that's what they
it's like it's 35 to 40% in our guidance range for fourth quarter.
I'm super interested in like new business models. We don't, like I said, we don't really have this kind of thing here in the US. So this has been fascinating for me. I hope everyone watching enjoyed as well. Catherine Chen is the co-CFO of Missresh. Catherine, thank you for joining us today on All Access.
Thank you, Spencer. Appreciate the opportunity.
All right. And something else to point out, she's obviously over in China. It's like midnight for her right now. So props to her for staying up late with us. I think it's almost midnight. Anyway, it is 11:11. So here's what we're going to do. I'm going to hop off here. We're going to start Benzinga Live in like 20 or so minutes. Let's just go to an intraday chart. This is Apple. Let's just stick with Apple here. Oh my gosh. Zoom way in on that. Hey. All right. We're going to be doing this all day, looking at these stocks all day. I did want to remind you all once again that today's show, every All Access show we do, is brought to you by Ticker. I'm going to bring the screen up, or the page up on the screen right now. There it is. I'm going to bring it up, the link. There it is. Let's put it in the chat, producer Aaron. TIICKER.com/Benzinga. Click on that link. It brings you to this page. You can create an account. Once you do that, you connect your brokerage. You confirm your email. That will bring you to another page with a box on it that says, "Are you a Benzinga All Access viewer?" You say, "Yes, that's me." Check the box when you confirm your email, and Ticker will send you a $20 Amazon gift card in 30 days. So again, TIICKER.com/Benzinga. Ticker with two eyes. If you don't know what Ticker is, allow me to show you.
What is Ticker? That's right, Ticker with two eyes, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Again, the link is in the description. It's in the chat, and it's up on the screen. That's simple. Check it out. All right. I want to thank all of the companies that joined us today. Thank you to Anne-Marie Sastry from Amesite. Thank you to Claude Maraoui from Journey Medical. Thank you to Ron Andrews from Oncocyte. And thank you to Catherine Chen from Missresh. Thanks to all of you for tuning in. We'll take like a 15-minute break, and then we'll go over to Benzinga Live. We got a full show today, like 5 guests lined up. It's going to be one of those days. We will be doing trivia, giving away some free swag on trivia today. The theme is going to be food. I think the theme is food. Some food trivia in a little bit on Benzinga Live. So yeah, just watching this market. Oh, you know what I meant to do that I hadn't done yet on this show is I meant to do a really quick crypto update before we go. I just want to pull up the heat map. I just want to look at how we're doing in crypto land real fast. I thought if I refreshed it, the colors would change. The colors ain't changing. Yeah. Okay. Bitcoin. All that matters here, there are 2 numbers that matter. 40K, 3K, right? Bitcoin below 40K, ETH below 3K. That's it. That's all I'm watching. Forget everything else you know or care about. I'm watching those 2 things. 3,000 in ETH, 40,000 in Bitcoin. We are below what I would consider pretty key levels. Hey, crypto's on sale. You can buy it for less. Also, hey, get some free Bitcoin while you're at it. Just go to the Voyager app Download the app. Use the offer code ZING, Z-I-N-G. Fund your account and make a trade, and Voyager will send you some free Bitcoin. But it's on sale. I guess that's the silver lining here. We'll talk more about this on Benzinga Live. So anyway, thanks to all of our guests. Thanks to all of you for joining. And yes, Shannon, trivia. I don't know when we're going to do trivia. It might be at the beginning. It might be at the end. Maybe Aaron Breen knows. But I'll see you guys over on Benzinga Live in a few minutes. And yeah, stay green out there. It's tough. It's tough out there. So, whew.